Peter Eliades with you. This is Stock Market Cycles update for Thursday, February 10th. I'm a little bit excited here, folks, because there could be something going on very important. This update is going to be for our regular subscribers, of course, but we're going to add YouTube onto this one. We haven't done an update for several weeks now, and this is a very important one. This is something we want everyone to know. First of all, as our subscribers know, we had two confirmed upside projections yesterday for the major indexes averages, the Dow, the S&P 500, and the NASDAQ 100, and several others, I'm sure, but those three we gave. A nominal 20-day projection, 7 to 8 day offset, and a nominal 5-week projection with a 12-1 to 13-8 offset. Today, the nominal 20-day projection to the upside was invalidated. Here it is right here on the NASDAQ 100. Here was the projection. As you note, it was given back here when the closing price went above the two lines, the offsets, and today just below both offsets, okay? That's important. We still have the 12-1 to 13-8 remaining. But I'm going to show you a few things. There it is right there. This is 12-1 to 13-8, still calling for higher prices, 15,330 rounded off to 15,807. Okay, these things right now could be important, but I have something which I think could be a lot more important for you. And we're going to go into it right now, and we're going to go into it in some detail. It's going to be a long update, so settle back. Those of you that love cycles and technical analysis, I think will love this update. Let me emphasize that what I'm going to do is show you a couple of analogs with the 1929 and 1987 crash. The analogs have been followed quite closely here. That does not mean that I'm encouraging you to run out and buy puts or to mortgage the wife, children, home, and family to go on the short side here. What it does mean is I'm going to show you something that could have great significance or could have no significance at all. Could be a coincidence, okay? So that's the way you have to treat it. If you're going to play this with your own money, do it with money you can afford to lose, okay? I'm making no recommendations here. That much having been said, let's take a look at what I'm going to show you. Okay, this chart goes back to 1929. It's a daily chart on the Dow. I have the Dow up because that's the one we have most data on going back. So that's the one I'm going to use. It could as easily use the S&P. Let me point some things out. This is the crash period in 1929, okay? This was the all-time high. The all-time high occurred on September 3rd, 1929. I'm going to show you a combination of some timing factors here that took place. Between this primary high, all-time high in 1929, to the secondary high before the crash, there were 38 calendar days, okay? We're throwing in a couple of moon phases here too because they might be important and correlate very closely in both the 29 and 87 crashes, okay? The new moon in this month in 1929 occurred on October 2nd. 9 calendar days after that new moon, the secondary top occurred. The date for the secondary top was October 11th, okay? So you've got it so far. Primary high, secondary high, 38 calendar days. New moon, 9 calendar days before the secondary top. Full moon, several days after the secondary top. And notice that we got above, I have the exponential 10-day moving average on here. We got above it for 6, 7, 8 days with the secondary rally after the all-time high. And by the time the full moon rolled around, nothing serious to the downside. We were still within a trading range. But on that day, we started down pretty good. And from that point on, we started breaking below the prior lows here, okay? That was, in this case, it was one day after the full moon, okay? Between the all-time high on September 3rd to the crash low day, and this is October 29th of 29, there were 56 calendar days. Now, mind you, the market went lower after that, but this was the crash. These 2 days in 1929 were the crash, okay? So that low came on October 29th. So I hope you have this picture, okay? Because it's important. 38 calendar days, primary high, secondary high. 56 calendar days, primary high, bottom of the crash. 9 calendar days, new moon to secondary high. A few days later, full moon. The break below the 10-day started around there. That's 1929. Let's look at 1987. Okay, folks, take a look. This is quite amazing. I was aware of this analog way back in 87 when it occurred because there were some people that were pointing these things out at that time. But it's nice to review it and be amazed by some of the analogies that occurred. This is the all-time high, 1987, August 25th. Between that all-time high and the secondary high that occurred on October 2nd, 38 calendar days, exactly the same as 29. The new moon occurred in 29 in this month, and September 23rd. 9 calendar days later, the secondary high occurred, exactly as it occurred in 1929. The full moon occurred October 7th of 87. Notice that we had gotten above the exponential 10-day for several days and just broken below it on the full moon. Didn't break below the prior low yet, though, so we held up there for a few days, but only a few days. Here's the full moon, and the break started taking place here about 3 or 4 days later. All that time below the exponential 10-day, and then into the crash. The crash bottom occurred October 20th, 1987. From the all-time high on August 25th to the crash low on October 20th of 87, 56 calendar days. Exactly the same time span as 1929. Is this amazing or what? Now, I think we took everything in here. 38 calendar days, all-time high, secondary high. 56 calendar days, all-time high to crash low. Full moon occurring here, new moon occurring here. Let's take a look at, guess when, folks? Guess when? Here we are, 2022. Let's take a look at a few things here, okay? Here's the all-time high. Actually, this is on the Dow. It occurred actually a tiny bit higher the next day. On the S&P, it occurred on January 4th, and that's the date we're going to use. Because actually, if you look at a closing price chart, you can see that January 4th was the high for both the S&P and the Dow, okay? So, let's take a look. What's going on here? 38 calendar days. Tomorrow, folks, October 11th. Okay? Now, measured from the new moon, remember the prior two were 9 calendar days from the new moon to the secondary high. Well, 9 calendar days this month occurred today. This was the 9th calendar day from the new moon, which occurred on February 1st. Okay? So today, tomorrow, you can see where we closed today. Again, exponential 10-day, 1, 2, 3, 4, 5, 6, 7, 8, 8 or 9 days above it. Today, we'll call this right on it, okay? Not quite above it. Okay, but 8 or 9 days, 6, 7, 8, 9 days, that was the pattern in the prior two. So, tomorrow is 38 calendar days from the January 4th all-time high. Did it occur today? Did we see something important today? Will it be tomorrow? Will we get another crazy rally into the close of the day today? Will it occur at all? Is this all fanciful, bearish talk from a person that's been accused of being a perma-bear? That I have not been. Those of you that have been around with me for 50 years know that. No one was more bullish than we were back in the 70s, mid-70s, and early 80s, okay? Anyway, that's a whole other story. But look at this. Now, the full moon, February 16th, okay? So if we follow the pattern, and nothing says we're going to, and nothing says we're going to crash, but if we follow the pattern, we'll hang up here maybe for another day or two, start coming down, won't go below this prior low in this time period, and perhaps might not even go below these lows. But right in this time zone here, over the next 3 or 4 days, we're scheduled to break below the 10-day exponential moving average. And then right after the full moon is when the break starts, okay? Now that you've seen this occur, and by the way, March 1st of 2022 would be 56 calendar days. That would be the crash low if the analog continues. Look, how many of these analogs have you seen? I've been around for more than half a century, folks. I've seen these analogs before, and they look great, and sometimes they last for a few more days into the third analog or the fourth one, and then they just blow away, and that's it. You don't see it any longer, and it was fun while it lasted. And that might well happen here. The odds favor that that will happen here. The odds favor that this is not going to happen for the third time in a row in almost exactly the same fashion. But this is something that I want you to be aware of, because that may be the reason why we're seeing some of these invalidations setting up on the upside projections, okay? It could be a longer term cycle turning down and getting ready to do something serious. I don't know. That's just a possible explanation. But this is where we are in the overall picture, and I think it's really exciting. Potentially could be very rewarding. I urge you again, do not gamble any money you cannot afford to lose in playing what you think may be happening here, or what the analog says could well be happening here, okay? Be cautious, be conservative. You want to use some play money? That's fine. I'm not going to argue with you, but make sure it's play money. If you do your own technical work and you agree with what you see here, you're on your own. You can take every penny of your capital and use it, but don't do it based on what I'm showing you, okay? All right, I don't know what else to show you. I mean, there are projections that we can look at, further ones, but this whole setup here is so exciting. I wanted to show it to you, and we'll be following the potential analog, obviously, for a few days here, okay? We'll be following it to see if indeed there's anything that comes from it. You know what to look for. I've showed you the pattern. It's pretty exciting. I mean, look at the similarities here. 38 calendar days. Today was the 37th. Maybe that's going to be it if the pattern carries forward, because we did get, this is the 9th calendar day beyond the new moon, okay? That's the way the other two, the 1929 and 1987, set up, 9 calendar days. Now that you've seen this, I'm going to take one more look back for you so you can see the pattern. Here it is again, okay? 38 calendar days. Here's the full moon. Now note, there are some differences here. The full moon occurred here, and by the time the full moon came, we were near the prior low. That's not the case right here. We're not that near the prior low, but we just broke below the exponential 10-day. And from there, it's kind of rolls over and then bam, crash, okay? Here's the full moon right here. Our full moon this month, February 16th. Let me show you 29 again. That's it, folks. Here's 29. Now, 29 is somewhat similar to we are here because we were well above the prior low. We spent 1, 2, 3, 4, 5, 6, 7, around 7 days above the exponential 10-day in the secondary rally. The top of the secondary rally occurred exactly 9 calendar days from the new moon. The full moon occurred several days later, and we had just started to break underneath the exponential 10-day. Didn't fall apart. We had a good down day here, held up for another couple of days, and around 3 or 4 days after the full moon is when the break started to take place, rolling around, and then bam, crash. Hey, there's a bell. Anyway, that's where we stand, folks. We're going to be following this very closely. This is Thursday. Tomorrow is Friday, the last day of the week. Our update, we may be excited to do it, I don't know, but our weekend update will go on sometime between Friday evening and Sunday evening for our regular subscribers. For those of you that are watching this on YouTube, if you enjoyed it at all, please give us a thumb up. Please give us a favorable review. If you have not subscribed, do so. You'll get to know when all the updates take place just as soon as they go on YouTube, okay? So, thanks for watching. Subscribers, we'll talk to you over the weekend.